This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 7/27/22, show number 413. We got earnings coming out, Nick.
We do. We have them coming out in droves, and we have the mega cap tech names that are reporting this week. Last night we had Google and Microsoft both reporting earnings. Both stocks are rallying higher today by 5%. Believe it or not, the earnings were not that great. But as I always say, it's the reaction that matters, not the news. And now we're going to look forward to tomorrow on Thursday afternoon after the close. We're going to get Apple and Amazon both reporting earnings. So that is going to be a big one there.
All right. And then FOMC is finishing up their 2-day meeting?
That's right. Later today, the Fed will conclude a 2-day meeting. Then we're going to get their interest rate policy decision for the United States. The central bank is expected to raise rates by 0.75 of a point, 75 basis points. Some investors are actually looking for them to raise by a full point. I just don't see that happening. They've been pretty firm and sticking to the script when they tell us something. So I'm going to go with the 75 basis point hike. Not that it really matters. While this news should be baked into the cake already, the verbiage should and could sway markets. So again, what they say is probably more important than the actual hike. So just be prepared for that. That announcement will come out at 2 p.m. And then obviously to be followed by a Jay Powell press conference that comes out at around a little bit after 2:30. So just be ready for that. And that will move markets. It certainly is a market moving event.
Yeah. Well, somebody said, a wise person told me they're just raising rates right now so they can lower them once the recession is officially declared.
Well, that's the theory. And, what I will tell everybody is this time it's a little bit different. Remember what the Fed did recently? They were doing a quantitative easing, meaning they were buying U.S. Treasuries and mortgage-backed securities to the tune of $120 billion a month, while the market was making new highs, while the real estate market was making new highs, and they had the Fed funds rate at, basically zero. So these guys created, or I don't want to say that they're 100% responsible for inflation. They're probably about 75% responsible for inflation. You could put the other half on lockdowns and every other dumb policy that the politicians made. But the truth be told is they printed a lot of money, and that's what caused this massive inflationary spike. Now, everybody's saying that maybe the inflation has peaked. As you see, we've seen a big move down in oil prices. We've seen a big move down in commodity prices such as copper and wheat and corn and so forth. But what I would say is that's just a pullback or a correction after an overbought condition, after a parabolic move. So we're going to find out who's right sooner or later here. Either way, the Fed has to raise rates. They have to catch up to the 2-year Treasury note yield. Everybody that's been in this business for any period of time knows that's what they track. In fact, if they just let the 2-year do the job, we wouldn't even need a Federal Reserve. So again, that's what they have to get to. And today, the 2-year Treasury note yield is at 3.04%. So the Fed still has a long way to go, in my opinion.
Well, we'll see if they have the cojones to actually stick it out and do it. I'm not convinced yet, but predicting what they're going to do is an industry in and of itself. The one thing is that whatever they do, it's going to be the wrong move.
Well, I think they put themselves in a really, really tough predicament. Last year they had every chance in 2021 to cool off the market. They had every chance to raise rates. They didn't do it. They just kept the pedal to the metal with the QE. They kept the Fed funds rate at 0%. And this is why we're here. I mean, it's really, really simple, basic economics. You don't have to be a genius to figure this out. My 15-year-old could do it. This is basic economics, but this is where we are. And this is what we're dealing with now. So, everybody is calling for the Fed to stop soon because the market has done the heavy lifting. And while some of that could be true, the reality of it is they got to catch up to that 2-year note, and they're not there yet.
All right. Well, I guess we're going to find out in the not too distant future. Gold is down a little bit today.
Yeah, gold is down a touch. I wouldn't make too much out of it right now. Down about 0.3%, not a big deal. But remember, gold is very reactionary on Fed comments. So I think gold will start to move around. I don't know if it's going to go up, down, or where it's going to go after the Fed announcement, because I simply don't know what the Fed is going to say, nor do I know the reaction from the markets. But gold will be a mover this afternoon.
Well, I would say based on Newmont and its move, gold is probably going to get slammed today. But correct,
Well,
I could be wrong.
You can make a case for that, and I wouldn't rule anything out. But what I would say is that if the Fed makes any suggestion that maybe the market has done a lot of the heavy lifting, and they may not have to go all the way. They may take a pause in here. I think that's very bullish for gold, actually. So we'll see how that plays out. And as for Newmont, I mean, I think this is a buying opportunity. So we'll see how that plays out shortly.
All right. And finally, Bitcoin is up a little bit today.
Yeah, Bitcoin futures are catching a bid today, trading higher by about 2.5%. They're in that 21,500 range. So this has simply been a trading range for Bitcoin as it's really just weaved the 20,000 level up and down, up and down. But remember, the bigger trend is down. I ultimately think while you could get some short-term bounces, the next leg down is going to be probably sub 14,000. So I would be careful there, but we still have some time to go before I think Bitcoin breaks.
Well, if we take a 90% retracement, that would put Bitcoin at 67.7 roughly. If we do an 80% retracement, right, that would put it right about 13.5 or so. So somewhere between those two numbers where it's gonna land, huh?
Yeah, I like that 13.5 level a lot, and I'll tell you why. If you just look at a chart of Bitcoin, remember we had that December 2017 peak. That is what that's what the Bitcoin market is testing now. And then after that, you're going to look at the June 2019 peak, and that will be right into that 13,500, 14,000 area. So I think that's going to be its next pit stop. That's where the next big support lies. And that has to get tested. That has not been tested yet. But in the short run, I think Bitcoin still can get some bids before we get down there.
All right. Well, I don't doubt it because nothing goes up only Bitcoin goes up in a straight line, but nothing comes down in a straight line because you got all these people who've lost money or made money getting scared and flushed out, right?
Yeah, and now you have to remember, too, people that are still holding Bitcoin, if this thing makes a move up to, say, 27, 28,000, what do you think they're going to do when it gets there? They're going to be sellers. They're going to be running. They're going to dump. They're going to be running for the hills because they're going to say, hey, I got back this nice percentage. I'm getting out of this thing. And that's what causes markets to make moves the way they do. So again, just keep that in the back of your mind. A lot of traders out here that are new to this business, a lot of people just getting into this business due to Bitcoin because they got so excited. But that's the way markets work. There's an old saying in this business, old support becomes new resistance.
Yes, exactly. All right. Well, that is it for today. Make sure you go over to Nick's site, inthemoneystocks.com, and see how he's beaten the averages for decades. The Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz. Emails, which we will be getting to on Friday, kl@kerrylutz.com. Nick, we'll talk to you on Friday.
Sounds good, Kerry.